Welcome back, my friends, both old and new. It's Monday, November 11th. So let's give our praise and our thoughts to the veterans. It's Veterans Day. Okay. The purpose of this video is the Trump trade. There's a lot of people that have a lot of fear, and apparently there's a lot of fear-mongering going on amongst the Democrats. But here's the way to trade Trump. Okay, first of all, oil broke $70 a barrel below. It was at 68 today. So expect oil over the next year or two to drop down to probably $30 per barrel. 30 a barrel. That's the way to get all the inflation. Well, not all, but it's the way to get a lot of the inflation out of the system. Reduce transportation costs, reduce costs for every single item in the grocery store. That's the way it works. So the first thing is expect oil to trend towards $30 per barrel. Now, is that going to happen overnight? Doubtful. Will that break oil companies? No. They will use the futures market, and they are using the futures market to hedge their production years out. So even if it drops to 20 a barrel, they can sell it today at 68, or actually even more. If you go out a couple of years, $72, $73 a barrel, and produce it at 20. So let's not worry about whether or not that can happen. It happened before, it's going to happen again. The next thing, the US dollar. I've been hearing about the demise of the dollar since I entered the financial markets in 1985, when the dollar was actually quite strong and interest rates were still quite high. It still costs, this is important, $117 to buy a $100 bond. Let me repeat that. The Treasury market futures price for March futures of the United States Treasury bond today is $117. That means you have to pay $117 to buy a $100 bond. This is not a collapsing US dollar. Okay. There will be a tremendous uptick in trade. The number one thing apparently that they're trying to scare Americans with now is the Trump tariffs. That everything is going to cost 20% more. Buy a car now because it's going to be 20% more. Buy this now because it's going to be 20%. But why washing machines now? Because this is nonsense. Yeah, there's going to be tariffs, but that's going to cause production to slow down. Instead of flooding us with 30,000 vehicles, they'll send 10,000. Okay? So let's not get crazy about what's going to happen. Inflation is not the word. Deflation is the word. Interest rates will come down long-term dramatically. The difference is it's not going to be quantitative easing now. It's going to be demand for US dollars. I'll get back and do more of these Trump trades if people have interest, but I don't pull this, I don't want to say it. I know what I'm talking about. I've been involved, I got involved in financial futures in 1985. Got involved with the gold market when gold was $230 an ounce. Krugerrands were trading at a discount to gold. That's how bad it was, 1985. So there's some experience here. I'm not telling you what to trade. I'm not telling you how to trade, but I'm telling you what's going to happen. Adjust yourself accordingly. Talk to you soon. Get me some new subscribers so I can do this more often.